The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour right here on TFNN. Make sure you listen to us anywhere you want to on the web, online, and we got radio shows broadcast throughout the country as well. But you listen to us anywhere on your mobile phone at tfnn.mobi. And check out the Tiger TV broadcast on the site as well, where you can see the charts of the traders, calling out the trades, talking about what's going on in the markets each and every day, 9 hours of live trader commentary. And looking at the markets right now, we got the S&P. It ran up and went to sleep. It's up 16 points right now on the day. We got the Russell up 8 points on the day. The Nasdaq's up 48, and the Dow is currently up 119. Oil's down $1.56, and I've been watching that one for the last couple hours just bounce up and down. And we got natural gas right now. It is down 2% on the day. We'll look at the natural gas inventory report here in just a moment. And then we got corn currently up 2.5 on the day, with soybeans up $1.50. The ag reports did came out, got a nice little move right off that report. And we'll look at the more detail on it here, like I said, in just a few minutes when we get into detail on the news reports. And let's see what else we got going on that we can check out over here. One of the things I'm looking at, we got, let's check out our FX pairs. We got the euro dollar up 42 pips, the Aussie dollar up 25, pound dollar is up 94 pips on the day. The U.S. CAD's down 114. Massive move on the dollar CAD right there. And it's actually the big currency mover of the day. You don't see that as often. Got the dollar franc currently down 84. Euro yen's down only 31. Pound yen down 10. And US yen down 53 after some wild volatility last night. Looking on over at gold, it is moving and it's shaking. It's currently up 31 points on the day. And silver is up nearly 4%. So silver's up almost 4% on the day. Copper is up almost 3% on the day. So with all that being said, let's check out and let's pull some charts up and see what we can find. But first thing I want to do is I'm going to go and I want to look at the USDA ag report. You can go over and just so you know where you can get that. USDA.gov. Okay, that's where they publish it, and it's the WASD report, or however you want to. I don't even know. There's probably some popular way to pronounce it, and but it's WASDE. It's World Agricultural Supply and Demand Estimates. Okay, so again, that's a World Agricultural Supply and Demand Estimates right there, and put that right over there for you. Make sure you got the link to that, and you can look at it, and you just refresh it to look at the the latest report, and you can pull it out from PDF. You can XML it. You can go in and you should be able to PDF it. You can download that right there. You can also just read the summaries, and they tell you how the report is prepared and what all the information is in it and everything else, and pull up the Outlook reports. So the most important thing, of course, is I'm just going to look at how the numbers came out, and so let's go in and let's just look at corn on the day, and let me pull up another chart over here so we can sort of dig right down into it. Okay, and we got a nice move, basically right there off the report. If we look at it, it came out at 12 o'clock right here, and basically it's flown right, let's see, let's find the exact opening, 12, 12, 12, there we go, so 12 o'clock. We had a quick move down 0.7 deviations, then it flew back up 0.7 deviations, so not really a massive move so far off the report. It is trending upwards at the moment, and so we'll just have to continue to watch it and see if it will keep going. Just got to follow the charts and do what they do. Don't try to get ahead of them. Don't try to outthink them. You need to have a trading system. So you need to definitely define your entries, your exits, your take profits, your stop losses. If you want to be a contrarian trader, talked to a bunch of traders about that this morning, about how to contrarian trade. And, you just need to have a plan down when you do it. Don't just randomly go in and throw trades on because you have a gut feeling. If you trade for any time, those gut feelings have a tendency to be wrong, right? So you want to make sure you go in, and let's look at a couple trades with that right now for reversals. And, one of the trades I was looking at earlier was I was actually looking at reversals on oil. And, saw it sort of doing a pullback here. And so I went short on the trade. And then I had a long trade to go long again. And then I saw a short trade. I'm basically seeing what you could call as double tops in this process. So swing trading this process right here on the oil contract. And really, we haven't had, what's funny is we haven't had massive moves, but we've had plenty of profit. So it is big. I guess you could say it's big moves. The thing is, today there was a lot of volatility built into the oil market, and so as big as those moves are, I mean, we're talking right now like sometimes 2 and 3 point deviation levels. As big as those moves are, the market had just much larger expectations. I mean, it literally just bumped. And I don't know what the reason was. I mean, probably most likely based on yesterday's implied volatility, where we hit 2 deviations. That'd be my guess. So, because the oil, based on the oil inventory report yesterday, literally flew up $3, and so the market already built in about a $3 expectation move, and like you can see right here down at 0.5 deviations. So if I break that down, I can go in, I can actually lower the level and check it out and see if it how much of an impact that had, and bring it back down to a little bit more normal levels across the board. But it's just, the market is expecting the market to move down a few points again today. They're expecting it basically to pull all the way back down to 103.27. So right now, that's sort of the trade that we're going for, and looking at a potential move all the way back down. And I mean, we got almost depending upon what kind of time frame, what kind of bar chart you're looking at. These are the trades that I was looking at right here. We had this down move. We had to pull right back up. We hit that same high. It failed. So you got a short, hit the same high again. So now we're like 1, 2, 3, 4, 5 tops. And so, I mean, it just right now just looks like the market's just heading south, and may keep on moving on back down to this level again. So you just got to manage the trade step by step along the way, and see what we get when it's all said and done. Let's see here. What else do we got that we can check out? So that's our oil markets right now. We're only up about half a deviation on that. And I think might be able to pull up. Let's see here. Let's check out the. Let's go ahead and check out natural gas. And on natural gas, we'll see what we're doing. That wraps up our energy sector. And on natural gas, we got some some big moves on natural gas. Again, natural gas is always a volatile instrument. Okay, so there's not necessarily just an edge because it always has volatility. But we got a solid 1 deviation move. What does that mean? The market moved exactly how far the market expected the market to move today. All right? It's probably done. It's probably just going to oscillate there. There's not that much time left until it expires. It's got another hour or so left on the clock for the pit to close. And yesterday we got that 1 deviation, 1.5. The thing fell all the way back down. I mean, it was a crazy volatile day for natural gas yesterday. But the market moved how far the market expected the market to move, and that's with the inventory report. Okay, with the natural gas British thermal unit storage inventory report. And so let me pull that up real quick. We'll see what it came in at. It came in at 82 billion on an expectation of 80 billion. That's not really far off from the expectation, but the number was a little higher on storage, so that should be a little bit bearish on price. And but first, it decided to stop any short traders out before it went south, and that's just the way they like to play the game. So, but you can see right here, if I go in, I can see that we got this moving right to, it basically popped up, fell right back down, and just sitting at a -1 deviation level. So these deviation levels really can help you quite a bit. Let's go in and let's look at our metals. So silver having some massive moves today, and we really got to back up to see what's been going on. This happened last night, so you're too late if you woke up this morning and decided to start trading silver. I mean, it literally, like, the bell closed on the market and silver decided to just go to the moon. And it literally flew up, check this out, almost 3 deviations, which is a 99.7% expectation of any movement in a day. Like, there's only a 0.3% chance that the market's going to move further than that. It goes up just almost hits it. Within like a couple ticks. Pulls right back to the 2 deviation level, drops almost an entire deviation, basically does drop an entire deviation, and it's just settling right there, right now, on the 2 deviation level. And if we go over, we can check out our metals. We got gold up right now. Gold is sitting over here. And gold is up. And it did move up. It actually hit the 3 deviation mark. It is sitting right on the deviation level. Probably going to do a whole lot of nothing at this point. And what does that mean? Well, let's check it out. Let's go down. Let's look at 5-minute bars. Let's add in a little 8 EMA on here. Okay. So I'm going to put my moving average there. I'm going to apply that. And while we're at it, okay, so we got that in. And all right, so we see a little bit of a downtrend move. And so do we have an opportunity over here? And I got let me check it out and see before this expires. I want to look at it real quick, and then we're going to take a call. But first, I just want to see if we got a trade that we might be able to hop in on at the moment. Because at 1:30, it's going to expire. But there's some massive, massive moves right there. And I want to do premium collection. So I'm going to pull up the diagnostic box spread scanner. I'm going to put a $70 to $90 risk right here. I'm looking more at a sort of a southward move over there on gold. And see if anything exists. Does it? Not seeing a single thing. All right, I'm going to reset my filters just to make sure I don't have anything wrong. But it looks like we got a 27.50. So I could make 27. So we might, that might work. Let's make this like 65 to 95. Okay? And then let's click on the sell side. And now let's bring that down to an hour. There we go. All right. So we got a $29 trade. That's at $29.80. That gives us 1 point of cushion. So we click on that contract, bring that up on the $29.80 right there. We can put that trade in, and that allows us to go south as long as gold will finish below, I said $29.80 will be the price there. Below $12.80, then it will be profitable on the trade. So that's what that requires, is that it does finish below $12.80. Awesome. Okay, so we got a trade in. And I'm also going to put in a take profit real quick on the trade since we got so much premium on that. No reason to hold it all the way to the end. Put a take profit to buy it right back there. We'll be right back after this. We got a caller from New York calling in about gold and silver. So stay right there. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So if you're in that trade, you should have been out of that trade because, remember, if it gets to your strike, you want to get out of the trade. You don't want to hold the trade until expiration. That's the big rule when you're trading on Nadex. Do not hold the trade until expiration if it gets to your strike, okay? It's very, very, very dangerous to do. It's easier to take the loss than it is to hold on to it all the way into the expiration of that contract. All right. We got a caller right now. We got Richard from New York. What's going on?
Hey, Darrell, how you doing? How did you enjoy the Bernanke roller coaster yesterday?
Oh, man. I love the Bernanke roller coaster. I can't wait because they know Obama's going to sign some new clown next year, right? And we already got Carney, so I figured just add somebody else to the three-ring circus. And he's going to sign somebody else to be Fed head. And who knows what we're going to get from that roller coaster ride. So, okay. I mean, like Bernanke, at least you sort of know what to expect, which is we're going to get rid of quantitative easing, but just we're not going to do it right now, you know. And I mean, it's the same thing over and over again. But, yeah, it's really interesting just to watch it all play out. But what you got? You got a question on gold and silver?
Yes. I did some fascinating trades earlier in the week, and I was just wondering, how did you line up your indicators? You had some great falls in terms of up and down. Like yesterday, you went short on gold. and it worked out, and the day before you were long on gold. What were your indicators specifically that you made those decisions to go long or short?
Well, the basic premise, I use some custom stuff that I made, but I look at, I have the 10-minute deviation, or 10-minute bar types that I use the deviations on. So that's the first thing. It's just looking at that, okay?
Right.
Because I want to see where the market's at in relation to its move. And, check this out. I mean, we're looking right here at gold. It hit 3 deviations, right?
Yeah.
Well, that's 99.7% of a statistical probable move in a day. So the chance that gold's going to keep going is, there's 0.3. So that makes it very easy to go short. Okay?
Right.
And then the number one, there's only one moving average I use. I don't use 25 of them like a lot of people out there use. I use an 8-period moving average. And so we have the gold trade on here, that we went short on. Got the 8-period moving average. And depending upon what strikes you use and everything else. Now, are you using Nadex, or are you using gold futures? Or are you using GLD?
No, I'm using Nadex.
Nadex, okay. So, yeah, so on Nadex, if you're doing premium collection and things like that, then what you're going to want to do, I use the 10-minute bars. I also use, Diagnostic Hour, right? So I use Diagnostic bars. It's really clean. And I have that, that pullback method I'm always teaching right here. There's oil from this morning, short, long, short, short right now. But let's see, going over it, if I'm looking at, gold, let me pull it up, I'll show it to you. And it loads. Takes it a second. So it's actually having to pull every single tick of every single bar, so it's pretty intense. But, come on. Takes a minute. But anyway, so what I use diagnostic bars. And what the diagnostic bars do is they literally add up every single tick. And they look at every tick within the bar. And so instead of using time, because it's sort of like a range bar or a Renko bar,
Right.
The issue is, to me, time doesn't make sense on a bar. If that makes, because why should I have a new bar because 5 minutes have passed? If nothing's happened on my chart, does it really make sense at all to have a new bar? Because, 5 minutes passing doesn't make something happen. What makes something happen is orders in the market, actual orders being filled, orders existing. And so that's why I prefer a price action-based bar type, like a range bar, a Renko bar. I don't like Hike and Ashy because those are like repaints. But I do like, range bars, Renko bars. The diagnostic bar that I use, that's just a custom bar I made for, it's a custom Renko bar. It's a lot more accurate than your average Renko bar. And, but it just, it may take an hour to make a new bar. It may take 5 minutes to make a new bar. That's why I have a timer down here, because I can actually see, this bar took 16 minutes. This bar took 8 minutes. This bar took 2 minutes. So some of these bars, take a long time. Some bars take hours. But I don't like having bars that get really messy whenever you're looking at them. But we'll talk about the pattern I use right after this break. So stay right there, okay?
Okay, thanks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. Okay, so you still there, Richard?
Yeah, absolutely. I appreciate that. Also, did you have your system going through oil today, and what was the indicators that you would see it go down? Because like Stevie was saying, it's going to 114, and I'm trying to figure out. I mean, why all of a sudden is it crashing down today when everything else is up?
I don't really know why things move. I mean, I know afterwards when I read the news, but going to 114, I mean, could totally be accurate. It's just what is it going to do between now and when it gets there, and how long is it going to take? I'm only a day trader, okay? Meaning, I mean, all my trades I'm opening and closing like same day.
What was your system? Now, were you trading oil earlier today? What was your system telling you in oil?
It told me short pretty much almost the entire day.
Based on what? The Renko bars?
Yeah, I mean, based on the pattern I use. So I don't trade with indicators. You notice there really isn't indicators on my chart besides an 80 MA that I use for moving average. I throw an RSI on there just for maybe a little like confirmation of divergence. But so basically, I'm looking for a pattern, and I have one pattern I trade on all markets, and that's how I always determine direction. So I don't really use indicators because they're always lagging. I'll use them sometimes for like maybe avoiding a trade. But they're just too slow for me. So I like the deviation levels for statistics. I like seeing what news is coming out to know what's going to move and when it's going to move for fundamentals. and then knowing like the pattern in a day on the seasonal cycle. And then I look at just one simple chart pattern of price action, and it's based on, I mean, my trading philosophy is based on how the market moves. So the market moves, like, why does the market move? Not so much that you're going to always understand, like, why something went here, why something went there, but the market moves for one simple purpose, to fill orders, and that's it. And that's why every market exists. It doesn't move to fulfill an indicator or anything like that. And once you understand it moves to fill orders, then it's like, okay, well, how does it move to fill orders, and where are the orders? And that's like the orders are going to be at like the deviation levels. Yeah, that's going to be where, that's why I trail stops when I hit a deviation level. That's why if it hits that level and it can't keep going and it comes back up and hits my stop, I figure the market's done for the day on that. So I basically just have to go, where are the orders? So now that's where indicators could come in. I could look at fib levels. I could look at support resistance. I could look at golden ratio and GAN. I could look at wave theory. And I could put all those together, and where they line up is what's called confluence. Traders talk about that a lot. So where confluence is where all the indicators line up. That's where the orders would be stacked. So to me, the use of indicators is to see where the orders are going to be located. That's what you're really trying to determine. A lot of times people don't know that. They think, hey, when this happens and this happens and this indicator crosses that indicator, I do this. But why? Well, that's because ideally that means that's where the orders are stacked up. So you can throw 50-day moving averages on there with everything else I just mentioned, or 50-period moving averages or whatever. And the more indicators that stack up in the same place, the more confluence you have, which means more traders, fib traders, golden ratio traders, Elliott wave traders, support resistance traders, moving average traders. You bring all them together, they're all going to have buys and sells. Now, you don't know what direction the market's going to go when it gets there, but you definitely know the market's going there because that's where all the indicators line up. And when they all line up in the same place, the market is going to go to where the orders are. And so my trading philosophy is I want to be the supplier, not the consumer. I want to be trading to that point and getting out usually, or at least taking profit or tightening stops when we hit it. So it's a little bit different than how other traders trade. But I mean, that's sort of how I was taught to trade by my mentors, and it's just to look at price action.
That leads to two other questions. I've heard stories that market makers on the floors, they have visibility of the existing orders. Like even if you listen to MarketCast on Thinkorswim, occasionally he'll mention, okay, there's so many stops above the market, even Bloomberg or CNBC. They'll mention there's so many stops below or above the market. And the market makers are adjusting the price action according to such. It's like the spike up, the spike down, and certain price squeezes. Does the retail trader have availability or visibility to those orders that are above or below the market in terms of overweight or underweight, other than what's broadcast, from MarketCast or CNBC or Bloomberg or how does a retail trader get the same level playing field to what the market maker has in terms of visibility of existing orders?
Well, there's never going to be, obviously, a complete level playing field, but the one, a market maker, I mean, they're not, and this is a big misunderstanding, like, their job is to make a market, which means to fill orders, right? Because when you go to the market, you want your order filled. You don't want to sit in line waiting at the register forever. You're like, hey, I got an order, fill it. So if there's an order in the market, their job is to make sure that order gets filled. And people go, they're stop running. They're not stop running. They're trying to fill the order. So the way that you can see where those orders are stacked is the easiest way is to look at less liquid markets. Like if you're looking at ES, I mean, it's so thick, it's hard to see anything. Well, if we go over to Russell, and right now you mentioned Thinkorswim. So I'm inside the Thinkorswim platform, and I have the active trader DOM up, okay?
Right.
And so I can see 10 levels deep, up and down, in the market. And I can actually see where orders are stacked. I can see where they've been filled. I can see, like, right here, looking at just today's price action, 2,000 orders have been filled, 2,000 contracts have been filled at 1027.3. That's probably a good, pretty decent resistance level, so that gives me a little edge right there. The market probably is going to want to bounce up and down between that quite a bit. Notice there's like 50, 53, 49, 57 contracts. Every other level I see has less than 50 except for one spot. Down here at 1025.4, there's 78 contracts. So that's a pretty heavy contract level for the market. So those are the areas it's going to go to. It's going to range between 1027.3 and down here between 1025.4 because that's where the big orders are located. You can do the same thing with a less liquid market like gold. We can see we got 1280, and down here we got 1279. So that's going to be a definite range right now for gold because that has like 20-something contracts, 30 contracts right now at 1279. That's a harder level to break through. There's 40 contracts down at 1278.5. So as a retail trader, you can see this. You can see the depth of market as well. You don't just have to be a market maker to see it.
How accurate is that? I mean, when you listen to Thinkorswim, some of the participants there, they talk about a lot of that as program trading in order to manipulate or to get false information of actual trades. There's trades posted there in terms of, but they're withdrawn immediately within milliseconds.
Yeah.
And also,
and there's also iceberg orders you can't see that haven't been submitted yet. There's other people who are going to submit at market when it gets there and it's sitting on their platform. They'll put orders out there to sort of create a heavy level. And
right.
But I mean, the market goes to where the orders are. So what you're going to see is it'll go up to that level and then they'll pull it. But remember, what I said is, what do I like to do? I like to go to where the orders are and get out before it gets there. So if you're doing that strategy, because that's what they're depending upon people getting in. It's going up, and people are going to buy. They put those orders in there to go, hey, we're willing to sell way up here. And so, so you can buy way up here. So the thing is, instead of buying when it gets there, I buy, and then I'm also joining in with them on the sell before it hits that price. So I don't care if it's an iceberg. I don't care if it's a fake order where they're just, robotically trading to put it in and put it out. I just want to get out before it hits that level. So if you're scalping, you're going to get out before it hits that level. So we don't want to wait till it hits it. If I'm going to get in, I want to get in after it. If I'm going to get out, I want to get out before it. If it's my stop loss, I want it on the other side. If it's my entry, I want it on the other side. So it's all about where you're getting in and getting out. If my exit, if it's my take profit, I want to be in front of the line, not behind the line. I want to be in front of the 30 orders, not behind the 30 orders. If my stop loss, I want to be behind the 30 orders, because what if it goes up there and it falls right back down? So I don't want to be basically in the middle of the line of fire.
Okay, that leads, I guess, to the final question. I don't know if you've ever been asked this before, but what have you noticed in terms of the psychology of the price action for, say, like the end of expiration? Like, for example, if the Nadex is up, 45 points at this point, towards the end of the day, is there short covering that's going to happen right before the close that you've noticed? I mean, there tends to be certain patterns that occur depending on how much the market is up, or whether the market's chopping, or if the market's down significantly, or depending on how much it's down. There seems to be significant patterns that repeat over and over again. I mean, could you talk about that going forward in the future, or would you recommend some books, perhaps, that identify certain patterns, like a day trader is, they're going to close out 15 minutes prior to the end of the day, but the market makers, they have an inventory. They're going to let the market ride down, 3 or 4 or 5 points, but they're going to spike it up, 30 seconds before close.
I think all that would be pure guessing and speculation, because I think it can change on any given day. It depends on what news came out that day, what news is coming out that night. Is it a holiday weekend? Is it a weekend? Is there a holiday coming up the next day? Are we near options expiration? Are we on a triple witching, Friday? It's all those different aspects. You'd have to account for all of them to actually get a seasonal cycle. So what happens when it's triple witching Friday? You have to get that. What happens when it's just a Friday? What happens when it's, there's only 2 expirations or 1 expiration on options on that Friday? What happens when there is a holiday? What happens when there's no holidays for the entire week? What happens when there's news that day and news the next day, or news overnight that they're expecting? All those factors literally would affect what would happen in that last 30 minutes. So I have seen the market, move significantly, and then it'll do a pullback, in the last 30 minutes or something like that. But, I mean, that also is just going to be visible on my chart. So I don't have to what you're talking about is sort of a seasonal cycle, an intraday seasonal cycle. And there definitely are intraday seasonal cycles, but you got it. They're constantly dynamic and they're constantly changing. So any book that you read on it is going to be out of date. You literally have to go back and look at about the last 20 or 30 days and see like what is that cycle, and then you need to pull up like something like Forex Factory. You look at what significant news events happened on those days to see if there's any similarities. And I mean, that's a hard one to say. I don't want to like lead you down the. Yeah, there are patterns, but whether those patterns are consistently there day after day, week after week, month after month is what I would challenge. I think that constantly changes depending upon the news and the fundamentals and things happening in the market.
Well, obviously, I mean, with option expiration or triple witching, that there seems to be a lot of aberrations that you can't pin on any cycle. But typically, when the market is up, significantly, the Nasdaq up 47 points, there tends to be a particular cycle, unless there's some other aberration. But it just seems, I mean, many years that you traded, I'm sure you observe a lot of cycles that you can count on a high percentage to repeat themselves.
Yeah, I trade seasonal trades every day. So based on, but I mean, they're like, I have like 15 markets I scan, and I look at seasonal probability based on the day of the trading day of the month, and then I apply an algorithm that I apply to it, and if it meets that requirement, then I take that trade. So I mean, I definitely do trade seasonal cycles, but like end of day cycle, it's going to vary so much. I mean, I just trade the chart. I'm just telling you how I trade. I'm not saying that it's not there, but I really just trade the chart.
Right, okay, I see. All right, that's very helpful, Darrell. Thank you very much.
Hey, you bet, man. Thanks for calling in. So really good questions, man. Awesome.
Okay,
hey, well, if you have any more questions, give me a call. We'll bounce them around. We'll see what we can figure out. All right? Have a great day, and let's check it out. Let's see where the markets are right now and what we got going on. We got the S&P is currently still up 16 points. Let's go in and let's look at the S&P, because this thing has just been quiet. So right on over here. And we had this run up. We had this one deviation run up last night. Everything just bam. And even though the Fed funds rate came out here, everything else just released right after the news, after Bernanke started doing his little speech. It was one of the things that was on my watch list, okay? Said, hey, around 4:10, he has some little random speech, and be aware of it. It's just a speech, but be aware of it, because you never know what the man's going to say in Q&A. And the market runs up and basically says, we're a long ways away from doing anything, that could possibly result in us getting of QE. And so with that, the market decided, well, that means the dollar is no worth and everything else is going to go up in value through inflation. And so, boom, everything flies up. Anyway, so we're up at one deviation. We sit at one deviation for hours. This is like the perfect premium collection day right here. It's like S&P is doing nothing all day long. So, I mean, this is butterfly heaven, binary butterfly heaven right here. You can go in. This is, as it moves up, go in and sell. If it moves down, go in and buy. Put them on. They're expiring every single hour. There's another one expiring in 10 minutes. Just constantly happening right now on the S&P. I mean, it's probably one of the flattest days I've ever seen. And it can make it difficult to trade as well, as you can imagine. So, but stay right there. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Scrolling on through, checking out the indices to wrap it up here. We got the S&P up 1 deviation right now. We got the NASDAQ is up 2 deviations on the day. It flew up 1, stayed there all day, and then decided to right around 9:45 to move on up and hit a second deviation level on the day. And let's see here. Let me drop this off my chart so it stops popping up over and over again. There we go. Okay. And then let's go ahead and check out the Dow. The Dow right here went ahead and moved on up just like the S&P, right up 1 deviation and just hung out there. And if I check on out and add in one more, we'll go ahead and look at the Russell. The Russell, not to disappoint, 1 deviation, probably the weakest out of the 4 U.S. indices today. So Russell just below the deviation at the moment, spending most of the time there after running up last night. And let's go ahead and look at our FX pairs. Let's check it out. We got Aussie dollar, and had a nice move up to 1.5 deviations, down to negative 0.7. That's basically a little over a 2 deviation total move on the day. Just some great trading available to you on the Aussie dollar. We'll go and check out the Euro dollar. Euro dollar ran on up to 2.5 deviations. Before doing a full retrace back on down to 0.5 deviation. Massive spike move. And last night was just a beautiful time to trade. If you were trading last night, you were loving life. And it was just trend. And the trend was definitely your friend last night. And then, let's see, you got the pound dollar up 2 deviations all the way back down almost to a 0.5 and then on back up to 1.5. There's some major swing trading going on right there over on the pound. And then if we go on in, let's look a little bit deeper. We'll go ahead and check out the USD CAD. Big mover on the day. Broke the 3 deviation mark, just busted below with all of that dollar weakness. CAD just couldn't keep up, couldn't hold it up, even with the little strength that it did had. And CAD just got stronger compared to the dollar, really just getting beaten. And so the dollar just flew on down. And, I mean, it was down to 1, then to 1.5. And, I mean, notice how it pauses here, too. I mean, it's just a beautiful thing. It's like 0.5, boom, 0.7, stops right there. 1 stops right there. 1.5 stops. Goes on down. Does a little oscillation right on the 2. Stays there for a little while. Then, boom, right on down to 3. Oscillates on that. Comes on back up to 2 deviations, oscillates right there, back up to 1.5, oscillates, back down to 2, and now it's just, in no man's land. But just some great volatile moves right there on dollar CAD. And then let's go in, let's check out dollar franc. We got dollar franc, it got a 3 deviation move as well, and it just flew on down. We can see the move. I mean, it didn't even stop at 0.5 or 0.7. It went straight down to 1. Bounced between 1 and 0.7 for a little bit. And decided to go ahead and not even look at the 1.5. Just drop on down to 2 deviations. Went ahead and paused there. Gave itself an hour or two. And then decided, you know what, not done yet. Going to go ahead and make one more last stretch. And bust through the 99.7% probability level. I mean, just hardcore, but then pulls right back to it. And now we're sitting right at the 3 deviation level on the money. So you can just definitely see how this could add up to help you out in your own trading, having proper expectations based on how far the market says the market's going to move each day. And right here we have the settlement on down to 0.5 to 0.7 to 1, on back up to settlement, on back down to 1. And just oscillating right there, just a great thing that you're able to take advantage of. Those 1 deviation bounces right there, just over and over and over again. And there's been some really good moves in multiple markets today. So I hope you were able to take advantage of them. I hope you were trading with some safety with Nadex. If you have not checked it out, go over to the TFNN homepage, click on that Nadex banner, get yourself a demo account, and get started today. I will see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.